Welcome to another amazing episode of Raising Private Money. I'm Jay Conner, your host, also known as the Private Money Authority. This is the show that we talk about how to raise private money without ever having to ask for money. Well, my special guest today, he's raised over $1 million so far in private money, and we're going to dig inside his brain to see where he finds these private lenders, how he starts conversations, how he goes about raising private money. And he's got all kinds of experience in different asset classes of real estate. But prior to getting into real estate, his first 10 years of his working career, he was actually a special education teacher. And he also worked for a non-for-profit organization. Well, when he got to his 30s, he figured out, I'm just a little bit unhappy with my financial situation, with what have I got going on. So he started investing in real estate in his 30s with almost no money whatsoever in his pocket to get started. So what did he do? Well, he started using creative strategies and began flipping houses on nights and weekends and school breaks. And then after that, or along with that, he started building a portfolio of small multifamily properties. Time permitting, we'll dig into how he went about that as well. And then shortly thereafter, he was able to actually quit teaching and went to pursuing real estate on a full-time basis. And then after the single family houses, he decided to pivot his focus on larger non-residential commercial properties, even after getting into multifamily. And so I'm so excited to visit in just a moment with my friend and fellow podcaster, Jonathan Hayek, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Well, hello there, Jonathan. Welcome to Raising Private Money.
Hey, Jay, it's great to be here. Thanks for having me.
Well, I'm excited to have you. I was on your podcast, which of course is called The Source of Commercial Real Estate Podcast. I was on that not too long ago with you. And now you've got more than 100 episodes on your podcast. And take a second and tell my audience about your podcast, because it's really different and it's one of a kind.
Sure. Like you mentioned in your intro, I am now looking to invest in non-residential commercial properties. And so for me, that's largely a focus on small industrial properties. These are single tenant properties. Think about tenants like plumbers, cabinet makers, granite fabricators, commercial landscapers, window manufacturers, tenants like this, and they need a place to do business, and they generally do not own their own real estate. And so there's huge opportunity in these types of assets. And I started the podcast because I wanted to learn this asset class. I did not know how to invest in commercial properties. There's all kinds of places to learn about multifamily and small multifamily and flipping houses, residential stuff, but I really couldn't find a great place to learn about commercial properties and investing in commercial and starting in commercial. And so I started my podcast over 2 years ago. It's interview based, and I interview experts in non-residential commercial real estate. These are brokers, investors, attorneys, lenders who are experts in their niche and their asset class. And it's focused on non-residential commercial real estate. So industrial, office, retail, asset classes like that. So if you have any interest, if you're curious about learning, how do I invest in that kind of stuff? The Source of Commercial Real Estate might be a place where you can get some value out of.
So that is such a niche of a niche of a niche. How did you get interested in this asset class? It's very different.
Yeah. So I would, like you said in your intro, I had this portfolio of small multifamily properties, and the original plan was to build this empire of small multifamily properties. And I got up to about 22 or 24 units of duplexes and fourplexes, things like that. And I realized that it was going to be a lot of work managing this stuff. And of course, you could have a third party property manager manage it, but that really cuts into your returns. And so I thought, wow, are there other options? Are there other asset classes in real estate that are less management intensive? And so my first commercial property was an office building. I bought a vacant office building, leased it up, and then sold it. I'm not looking for any more office buildings. That was a great experiment. I learned a million lessons on that deal. But then I started buying some small industrial properties. These are generally under 20,000 square feet, single tenant properties, and they're generally on triple net leases. And what that means is the tenant pays for taxes, insurance, and maintenance. So, me as the owner, I am not getting those calls about, the a faucet running or the toilet's clogged. Or a light bulb is out or anything like that. The tenant is responsible for the majority of those things. And so I can still get the checks. I get the rent checks every month, and I get the appreciation over the long term. I get the tax benefits, but I don't have the headaches of people to say, tenants, termites, and toilets. I generally don't have to deal with that stuff. And so that's why I love this asset class.
Well, that makes a lot of sense, particularly when you're not having to deal with repairs as well. So, how do you find these deals? I mean, a niche of a niche of a niche. I mean, there's lots of single family houses, right? There's lots of multifamily out there, but these industrial, 20,000 square feet or less or whatever. I mean, do you have to go outside your area? Are you able to stay in your area? What do you do? How do you find them?
I am open to investing in like 39 states across the country. So the cool thing about this asset class, and so I mentioned that they're low management property. So you do not have to be local. I live in Colorado. I own properties in Wyoming and Oklahoma, and I do not have a third party manager for them. I self manage these properties from a distance, and I don't lose sleep at night. I do not get phone calls about, all those things that I mentioned earlier. So that's the cool thing is I can invest nationwide. There's a handful of states that I don't invest in, or I'm not open to investing in for various reasons. But you really can do this from a distance, and deals come from a lot of the same places that residential deals come from. So I look on the market. So you might be familiar with a website like LoopNet. There's a similar website called Crexy. I've gotten deals through brokers, and I don't own a ton of these right now. I own two, and I'm under contract for a third. So I have a very specific buy box of what I'm looking for. I'm looking for deals that have below market rents and expiring leases. And those are hard to find because that's a seller that's selling in that situation is selling low. And that's why I look for them. I'm looking for value. And so when I buy properties with expiring leases and low rents, that means I can take the property over, get a long-term lease, increase rents, and that increases the value of the property. Those deals are hard to find, but they do come. I've bought deals off the market. I've also bought deals off market from a broker that just brought me a deal. I also do some direct mail, direct to seller, direct to owner kinds of marketing. Haven't landed any industrial deals that way. I've landed a bunch of residential deals that way, but no industrial deals that way. But I will one day if I continue doing it. I will at one point.
Right. How do you go about evaluating the value of a industrial property?
Yep. So in the commercial world, values are derived by the net operating income. And since these are triple net leases, meaning the tenant is paying taxes and insurance, I have very few expenses. And so generally, my NOI is the amount of rent that the tenant is paying. And so once you know the rent, the amount of rent, the annual income that the property is producing, it's oftentimes, not always, but oftentimes valued on a cap rate basis. And the cap rates can vary from 6 to 10% cap rates. And so a 6% cap rate will have a higher value. A 10% cap rate will have a lower value. And, between a 6 and a 10 cap, though, that's a really wide range of value. And so the factors that impact the cap rate are the market, the quality of the building, the lease that's in place, and the type of tenant. And so you're probably familiar with driving down the freeway and you see these giant warehouses go up that are 100,000 to 500,000 to 1 million square feet. And oftentimes they're occupied by Amazon or another large tenant like that. That property is going to be valued at a very low cap rate. Amazon is a great tenant. It's a brand new building and it's likely a long-term lease. And so the owner of that property has a very high valued building, and that's great for them. But for people like me, I'm not interested in those properties. I don't have Amazon as a tenant. I'm not interested in those properties because there's no way to increase the value. It is what it is. There's probably at least 10 years left on that lease. You've got a top tier tenant. And, that's a coupon clipper. You're not going to have to do much to that building. So that owner has a very steady rent check coming in. But there's really no opportunity to increase the rents over time. So what I'm really interested in is a property that is, it might be a C-class property. It might be 20 to 50 years old. And the lease is expiring but the tenant wants to stay and they're paying below market rent. And so they're willing to pay more and they're willing to sign a long-term lease. And so when I can increase the value of the property and extend the lease to a longer period of time, that increases the value of the property. And so then once I increase the value of the property, then I have options. Then I can refinance and take some cash out, or I can sell it and move on to another property.
Makes sense. Well, you've raised private money, and the name of this show is Raising Private Money. So I suppose we should talk a little bit about raising private money. You've raised over $1 million. So let's dive into your experience with that. So first of all, what type of asset classes have you raised private money for?
I've raised private money for single family homes, my personal residence, my first personal residence that I bought with my wife, we had private money on. I've done it with small multifamily, and I've even raised private money to buy a small industrial property. So you can really do it with almost any asset class.
Nice. So how have you gone about raising private money? What have been some of your favorite ways to do it? What type of relationships have you borrowed from? Are these people you already had a relationship with, et cetera?
In my experience, the successful raises through private money happen through relationships. These are friends and family. These are not strangers that I meet on the street, that I play pickleball with, or anything like that. These are people that I've had relationships with for years, and they trust me. I explain a deal to them, but they're really investing with me as a person, and they trust me, and they've known me for years, and they trust and believe me that I'm going to pay them back. And so that's really what's been successful for me. I'm not an especially outgoing person. I'm not a salesperson, but yet I've raised a bunch of money from friends and family. And these are straight debt deals. They don't have any equity in the property. So generally it's secured by a promissory note and a mortgage. And there's a general time frame that I put on it. I'm always very open about my time frame. If it's, a straight flip, I tell them, this is probably going to be in the 6-month range, could be 12 months, but I always communicate with them along the way, especially if anything changes. I have an industrial deal right now where I have private money on it. And I've had that private money for 18 months now. And that's just because of the way in that particular deal, the way interest rates have been. But I was upfront with that private money lender. And truthfully, this industrial deal that my friend is lending on is the safest deal she's ever lent on. She's probably lent to me probably 8 different times for different deals. And I keep telling her this is the safest one she's ever done. Not that her money is ever in danger. I'm always going to pay her back. But the tenant that's in this property, the lease, the rent that's coming in, it's a very, very secure investment. And so for me, it's always been relationship based through friends and family.
Yeah. And I know what you mean. I mean, the word trust is very, very important. I couldn't agree with you more when you say that they're actually investing in you. They're really not investing in the property, even though the property is securing the note. And I like it when I hear you say you gave them a mortgage here in North Carolina. It's a deed of trust. It's that legal document that collateralizes that note, gives your lender, of course, legal recourse. They could foreclose if they had to. But as you say, the trust factor is very, very important. That's why I call it relationship capital. Now I've got 47 private lenders today. A lot of them I've never met. So how did they come about? Well, I was referred to them by an existing private lender that I already had a relationship with, and then got referred over. So when you've been raising the private money, have you been like pitching a deal or tell them about a deal? Or do you talk with them first about, hey, I've got a private money opportunity and here's what I pay. And when I have an opportunity to come along, I'll put your mentor to work for you as soon as I can. Which approach do you take?
It varies. So let me tell you about the first deal that I raised private money for. I was a teacher at the time. I had basically no money. It was my wife and I's first home. This was a deal that I bought from an online auction. I bought it from auction.com.
Oh yeah, I've bought houses from auction.com.
Nice. And at the time, things may have changed. This was 7 or 8 years ago. You had to pay cash, and the purchase price for this property was $136,500. And I didn't have $136,000, but I knew there was opportunity in this property. And so I had this friend who is a little older than me, and I've known him since childhood, friend of the family, and I've always kind of looked up to him. And in having a conversation with him one day, he said, I was talking to him about getting involved in real estate. He said, well, I've got this self-directed IRA. And so if you're looking for any investment, let me know, because I'm looking to put this money in a self-directed IRA to work. I think I had that conversation with him before I had a deal. And so it was a conversation. It was listening. It was talking to someone who is interested in real estate. And so that's kind of been the pattern from a lot of my private money lenders, and I only have a handful of private money lenders. Is they're all they're all interested in real estate. They've had investment properties, they've had rentals. They understand real estate a little bit. I'm not saying you can't raise money from people that are unfamiliar with real estate, but it certainly helps that you don't have to explain everything like in a 101 course to them for them to understand how it works. And so, in that first deal, I went back to him. His name is Ryan. And I said, hey, you at one point mentioned that you had this self-directed IRA you were looking to invest in. I have this deal. And I explained it. I said, would you be interested in lending on it? And he said, yeah, sounds great. And so he lent $110,000 on it. And then I had another friend who lent $50,000 on it. And so that got me really close to, it got me over the purchase price and a little bit of rehab money. And so after about 6 months, I was able to fix up the property. It needed a lot of work. So I fixed up the property and refinanced it into a conventional mortgage, paid these private money lenders back, and that's how that worked. With other private money lenders, it took time. You may have to, for people unfamiliar with private money, you may have to have to create a track record, and you may have to get some successful deals under your belt. And so, there are other ways to get money creatively. There's hard money. I've used balance transfers from credit cards. I'm not endorsing that. I'm just saying I've done it. And then eventually, I was able to use banks and local community banks. And so, all these funding sources helped me to create or build a track record. So I could go to private money lenders, or I could just casually say, or they could observe and say, hey, I've done 5 of these deals or 10 of these deals, and I've made money on all of them. Everyone has gotten paid back on time. And so a person's history is likely to be how they operate in the future. And so, yeah, some people, I would say some lenders are going to be a little more ambitious, a little more aggressive, and just say, sure, yep, you can, I'll lend you money, no problem. Some are going to want to see a track record. Some, it might take years. You might have to talk with them for years. But yeah, it generally helps to have a track record and to have a deal opportunity in front of someone. So you can tell someone, this is the deal, these are the numbers, this is my plan, and this is when you're going to get paid back. That gives someone something to hold on to, rather than having this nebulous situation of, hey, one day if I get a deal like this, would you be interested? And it also puts like a time frame on a lender, because if you talk to someone but you don't have a deal for a year, they might say, well, that was last year, things have changed, I need the money. But if you say, hey, I've got this deal right now, and I'm closing in 2 weeks, would you be interested in lending on it? Here are the terms, here's the deal.
Yeah, and you're taking a very similar approach to what I do. It doesn't sound like you're chasing, begging, trying to persuade, trying to sell anybody. You're just simply, instead of asking for a mortgage, you're offering a mortgage.
Yeah, 100%. I am not interested in taking someone's last dollar to invest in my deal. I'm not interested in having, Uncle Joe, s- you know, s- stay up at night wondering if his money is safe. I want people to invest with me who are confident, who are financially confident, who are confident in real estate, and who feel really good about the situation. Like you said, I'm not interested in begging. I don't want to have to convince someone. I want it to be a good match. So if someone has money to invest, I have a deal that they're interested in, they trust me, it's a good match. That's a good situation for me. I am not interested in doing, phone calls and follow-up phone calls and text messaging and all that kind of stuff. Reaching out to people cold on LinkedIn and Twitter. That's not me. I'm a relationship-based person, and if there's a good match there, that's what I'm looking for.
Yeah, same thing for me. So, by the way, do you, Jonathan, have an opportunity now for investors or private lenders to get involved in?
I always have opportunities. I mean, if there's money, I can find a deal to put it to work. But that being said, I'm a relationship based person, and so if someone's interested in building a relationship and talking about real estate, I'm happy to have that conversation. But again, I'm not on my hands and knees asking for money. But the more money and the more investments, more investors I can bring on board, the more deals we can do. And so for most people, capital is a limiting aspect to investing in real estate. And so, sure, if I had more capital, I'd be doing more deals.
Sure. So, what's the best way for people to reach out to you and find you?
You can go to my personal website. That's jonathanhayek.co. I have some properties that are in my portfolio, some deals that I've done, all the ways to get a hold of me, links to my podcast. I'm most active on LinkedIn, but not super active on social media. But if you'd like to get a hold of me, reach out through my website, jonathanhayek.co.
And that is spelled www dot Jonathan, Jonathan, Hayek, which is Hayek, Hayek dot Again, that's Jonathan Hayek, JonathanHayek.co. Jonathan, I know one of the topics that you love to talk about is mindset. And it goes without saying, for someone to be successful in real estate investing or just simply to be successful as an entrepreneur, it takes some special mindset characteristics. Tell us about your mindset tips that helps achieve big results.
You know, when I started my working career, I was a special ed teacher. I had this idea in my head. In fact, I said to my wife one day, we're just not going to make very much money. We had been married for maybe 2 years at this point, and I said, I'm sorry, we're just not going to make very much money. I was a teacher. She was working for peanuts for a non-for-profit. And after I said that to her out loud, I reflected on that and I said, you know what? At the time, I was like 31, 32 years old. I said, you know what? I'm not okay with that. I still have the majority of my life ahead of me. I am not okay with being stuck where I am right now. I was a teacher at the time and it was not a life sentence. I was not, I was not handcuffed to being a teacher. And so, that sort of examining my own limiting beliefs really got me thinking. And I have some mantras that I think about. I would encourage other people to have mantras. One mantra that comes to mind that I think about is you're not thinking big enough. And, I think I was brought up to be I love my parents, but I was brought up to be kind of a small thinker, to be an inside the box thinker, to toe the line and look for and cling to comfort and security. But as I got into adulthood, I was just not okay with that. And so as my mindset continued to encourage me to think bigger, I started thinking outside the box a little more and quit my W-2 job and pursued real estate full time and, started pursuing bigger deals and deals that other people weren't doing. I mean, these industrial deals, I didn't know anybody doing these deals, but I thought that was something it was an asset class that I could be successful with. And so I would just encourage people to examine your limiting beliefs, consider why you believe the things that you do. It generally is going to go back to your childhood and the way you were brought up and the things you were taught. And encourage yourself to think bigger in order to do bigger things to live your best life.
So another thing that you talk about, Jonathan, is you talk about right sizing. In other words, you talk about right sizing a business for the individual, the family, their lifestyle, etc. So, what kind of suggestions do you have for people that are wanting to either get into real estate, build a real estate business, grow their real estate business that is a quote unquote right size for them?
You have to know your why. And you may not know your why from day one, but that needs to be on the forefront of your mind is, why am I doing this? There is there's a pervasive pressure on the internet and social media and podcasts to always go bigger, to scale up, do bigger deals, partner. You need to build your portfolio. You need more doors. You need to syndicate. You need a fund. And, there's this undertone that bigger is better, that if you're in real estate, you always need to be doing bigger deals, build your team, get more money. And I am not convinced that that is the right way for everybody to go. There is nothing wrong with having a big portfolio, building a big business. If you want to, like as a personal challenge, you want to syndicate deals and build a fund, and you want to build a business, and you want to see how big of a business you can build, and that is your why, great, go at it. But I think the majority of people, their why is they want to spend more time with their family. They want to travel. They want to live life on their terms. Well, if you have this huge business that you are the CEO of, or you have, 200 investors on this deal that you are trying to keep updated and give monthly updates, that is not freedom. And so be very careful about crafting the business and your real estate portfolio so that you are building the life that you intend, not the life that you believe people on social media think you should be building.
That's great advice. I mean, I've got a lot of friends that have gone down this road of bigger is better, and they end up asking themselves, wait a minute, why in the first place did I get into real estate? I didn't get into real estate to be working 60, 70, and 80 hours a week and having the business run me instead of me running the business. Jonathan, what a delight. I've been so happy to have you here on the show. Thank you for joining me. One more time, folks, if you would like to have a visit with Jonathan, as you can tell, he's got integrity. He's got a lot of experience in real estate, and he can get you really nice high rates of return safely and securely. You can visit with Jonathan or set up a time to visit at www.jonathan, Jonathan, Hayek, Hayek.co. Thank you so much, Jonathan. God bless you.
Jay, thank you so much.
Thank you so much. And there you have it, another amazing episode of Raising Private Money. And I need your help. I really appreciate you rating and reviewing the show. That allows me to keep having more amazing guests come here on the show to inspire and enlighten audiences just like you. So be sure and follow me as well. If you happen to be watching on YouTube, be sure to like, share, subscribe, and click that bell so you don't miss out on any more upcoming amazing episodes. I'm looking forward to seeing you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.